Today, it's Edwin's Monday evening property rant. Hello again, it's Martin North from Digital Finance Analytics. Welcome to the latest post covering finance and property news with a distinctively Australian flavour. And it's Monday, and of course, Edwin's back. Hi, Edwin.
G'day, Martin. It's a rollercoaster ride, mate. It's a rollercoaster ride, baptism of fire, and But the good thing is that you're trending on Chinese social media. At least that makes up for my deficit in my crypto wallets.
Right. Well, I think you've broken blockchain, right? So as soon as you started going into the crypto world, they fell off a cliff.
And it's still going. I'm still buying the dip, Martin. I know how many bags I bought from other people. Dusty and Evan bought their bags. I think they got rid of Dodge a few weeks back.
Yeah, well, I did say the trouble with crypto, of course, is nobody knows what it's really worth, right? And there's a guy called Robert Shiller in the US who's a very good and famous economist, and he's talking about the wild west of the markets, and he includes cryptocurrencies, the major stock markets, and gold as well. And he's saying it's all nuts. It's nothing to do with fundamental value at the moment. So expect more drama ahead.
Well, look, that's right. We're going to be talking about the report from REA with regards to more properties being sold on the market for Bitcoin. That's interesting. This emerged a few years back, but people were only taking deposits at that time. There was a property in Blacktown, of all places, that came up with a local Blacktown agent, and I inquired about it. I spoke to one of the reporters about it. So that was 4 or 5 years back. But now they're actually reporting that there's more property being sold, with crypto, or with Bitcoin. So been bought and sold. So I can only imagine that it's a full purchase, because we're also going to break that up a little bit more and open it up and look at the potential pitfalls there as well later in the show.
Yeah, very important, and it's fascinating to see some of these new developments move forward, and people should understand I'm not intrinsically anti blockchain and what it can do, but I am concerned about the spruiking and, frankly, the lack of value that's attached to most cryptocurrencies at the moment. So you can trade the volatility, you can buy the dip, as you're doing, Edwin, but nobody quite knows nobody quite knows where true value may lay. And some will say true value is to the moon, others will say true value is precisely zero. The truth is somewhere in between, probably, but I have no idea how you determine what fair value is. And it's worth just reflecting on this. Every time somebody sells, somebody on the other side is buying, right? So if you're buying the dip, then somebody is selling the dip as well.
Well, that's right. But then again, Martin, I'm reading more and trying to understand all this, and then you got fiat currencies and the fact that what's it all backed up by? At one stage it was gold, but what's backing it up now? I do believe our mate Adams is still wanting the English to give back our gold. I mean, what's the go there?
Well, that's right. No, I mean there is an important point there, Edwin. That some people say, crypto is based on a faith and a hope and an expectation, but you could also argue the same for other fiat currencies too, because essentially we've had massive quantitative easing and money printing for a long, long time. So effectively the number of dollars in circulation has gone up. And there is a way of saying that actually it's not house prices that are going up. It's the fact that the value of the dollars are going down. And that's one of the critical issues, right? So effectively we have fiat currencies that really have no visible means of support either. And then, of course, that then says, well, what about gold and what about silver? Yeah, maybe, but then those markets are also rigged. And the problem I've got is, Edwin, wherever I look, okay, whether I look at Bitcoin, whether I look at silver, gold, property, or even stock exchanges, those markets are not without, frankly, spruikers and being rigged. It's very hard to know where fundamental value lays at the moment.
Look, exactly right, and it's interesting how now the Chinese have finally put the Chinese government have finally put their foot down and said enough is enough, and they've it's against the law and there will be punishment. They've even set up a hotline to dobbing your fellow Chinese person and in China, that is, and if they're mining crypto, dob them in and they will get punished and severely. Well, I guess and on the other side of that coin, crypto coin, is the fact that they want to introduce their own digital currency to work side by side with Russia, Iran, and possibly North Korea, but to basically bring the US dollar to its knees, and they will be able to transact. Because I mean, my limited understanding of all this currency trading and everything is the fact that Russia can't trade in US dollars, the way that trading's done from one country to another, but through this digital currency, that's going to basically open the doors for Russia to trade directly with China and Iran and a couple of other countries that they're bringing in. So therefore, wanting to really put a lot of pressure on the US dollar.
Well, that's true. So the central bank digital currency, which is effectively a digital currency that is not decentralized and is totally controlled, is in stark contrast to the likes of Bitcoin and the other cryptos that are completely decentralized. But there is a tussle going on between the central bank digital currencies, and China is leading the way. It's already got pilots out there. It's already given people in certain cities free digital currency to go play with. It's worked quite well. And you're right, there is a bigger play here in terms of trying to usurp the US dollar as the fundamental currency of international trade. Now, if they were successful in doing that, and if they were successful in taking it into the digital world, then the West would be considerably discombobulated, to put it mildly. And that's one of the reasons why we've now got the Fed, the Bank of England, and even down here in Australia, the RBA, beginning to experiment with central bank digital currencies. But the critical question to ask is it feasible to have a central bank digital currency controlled by the central bank? So basically it's the same as we've got today but digitalized, and some would say, well, we've already got digital currency because I pay with my credit card and I send money in over the bank account electronically. So what's different compared with the decentralized Bitcoin stuff, which basically has no central ledger, nobody is in control of it, and it's basically the blockchain accounting that keeps it all ticking over. So these two things are pulling in completely different operations, one centralized, controlled, one decentralized and open. The question is, can they really coexist, or will we see more and more central banks and governments throttling back the use of some of these cryptocurrencies and pushing very hard the cryptocurrency based on a central bank digital currency? That's the game that's currently playing out. China's leading the way.
Yeah, look, but we may be leading the way with mortgage stress, Martin. How's that for How do you like them apples? And we got to be leading somewhere. We're going to talk about that as well. They're the chatterers and your fame over in China. They're talking about you. You become a star. So you might get a medal from Z. Who knows?
Well, that's. I have to say, I like the segue you've just created there. But it is interesting. So there's been a lot of happening with regard to mortgage stress. So I did some work with Choice, which is the consumer advocacy body, and they basically have started now publishing some of my mortgage stress data, and that's got picked up in a number of the media outlets around the place, because the media really from time to time touches mortgage stress but doesn't really give it much of a shove.
Sydney families are having trouble making repayments on their homes and are at risk of losing everything. A new study has found mortgage stress is growing, with experts calling on the government to keep vital lending protections in place.
Mum of two, Neelam Kirk, knows how tough owning a home can be.
We had a home, but we decided that it's much easier to rent a house.
Aside from no longer paying a mortgage,
In terms of not having to pay for, ongoing maintenance of the house.
new figures from Choice have found more than 60,000 households in New South Wales are battling mortgage stress. The suburbs worst affected, Campbelltown and Ayres, with more than 10,500 families struggling to cover repayments. Also Liverpool and Warwick Farm, and households in Mount Annan and Harrington Park battling too to make ends meet.
These are areas where lots of people are really struggling to make their repayments and to pay their other bills.
Despite the risk, auction clearance rates are at record levels.
We've had at least 80 groups through over the campaign.
This one-bedroom apartment in the inner west selling today for $50,000 above the reserve.
Bidding done. It is sold.
Still, there are fears many are overstretched.
It's a lovely place to live in Sydney, so it's always going to be difficult to afford.
Financial counsellors say that they are now overwhelmed with cases as more and more people are being forced to spend more than they earn. And there is now a further push to prevent the federal government from removing vital protections.
Which is why we're saying to the government, don't get rid of safe lending laws. We need to have a level playing field between borrowers and their banks.
Samantha Brett, 7 News.
But it's a really important story, 41% of Australians struggling with cash flow at the moment on their mortgages. That's a huge uplift from where we were a year ago. And now some of these stories are indeed being picked up and even being translated into languages that, I can't read.
Well, look, the images, the screenshots that I sent you are from our WeChat chatters that have said, the Chinese social media is going crazy with what you guys are bringing out with respect to the apartments and what's happening with the potential number of apartments that are going to come on market in Sydney. They're quoting 2,000 plus. Some of the numbers that we've been throwing around in our previous discussions, in Melbourne as well. What you've shared about what's happening in the inner city of Melbourne, the CBD. It's and basically they're picking up on what we've been saying, Martin, and we've been saying for a very, very long time, which is the shift, the mind shift, and which also translates into a demographic shift of people looking for lifestyle rather than living in space in a high-rise building that potentially can become a big cluster. I was going to say cluster F because I've been hearing those videos of yours. You're using you bring in the F word, but I had to restrain myself, Martin. This is PG show, unlike the shows that you've been bringing up with Adams there, swearing and carrying on. But anyway, it's those apartments become a major cluster for potential issues, and people are scared of that. So they're highlighting those things that we've discussed, that we've talked about. With what the local Chinese investors are doing and what they're looking for and what the communities here are looking at, which we've mentioned, apart from the fact that there's a lot of WeChat chatterers over in America and in Canada that are looking at Australia very, very closely because of the fact that it's a safe haven, a very safe haven. So all these things are raised in that article. But it was just for me, it was more interesting and more fascinating to see how the social media, Martin, 1.3 billion people reading about you. Your channel subscribers are going to go through the roof.
Well, maybe. It's interesting to note that the Chinese for SQM Research in Louis Christopher is SQM Research Louis Christopher, and the Chinese for Digital Finance Analytics is Digital Finance Analytics. So we're untranslatable.
Yeah, in CBD. But then one of the funny things there was that they also quote our mate Cameron Kusher, and saying that he's saying that it's all right, folks. Things will get better. Nothing to see here. It'll all work its way out, and you don't have to be fearful. And they take a very interesting commentary on what they're reporting of him saying. So
Yeah, I
I
saw that, and of course, REA may have a bit of an axe to grind, bearing in mind where what it represents and how it positions itself. But I'm not sure whether that nuance would come through in terms of the way it's reported. But it is fascinating that what's going on in the Australian property market is echoing around China through social media in China. It's pretty fascinating.
Well, it is, and predominantly now it's the apartment market, because obviously that's the biggest market that their local investors in China have been. Their investors in China have been exposed to, Martin. Although they bring out what's happening here in Australia with the local Chinese groups here in Australia, as opposed to the local Chinese investors there in China. So it's interesting, and I guess it's a really a warning to the people to be careful as to if they should ever want to in the future move forward, because of the potential carnage that's on its way. And as you and I've said before, there's been the developers, the property marketing companies have been drip feeding the apartment market, and to think that there's only 7,000 apartments listed for sale in Sydney Metro, is a joke. Given the numbers that you and I know that some of these marketing companies are holding on their books, but they won't obviously advertise them for obvious reasons.
Absolutely. Well, it's going to be an interesting few weeks and months. There are signs of prices still going up in some areas, but not in others. And the forward supply of properties coming on the market, and again, there was an AFR article that quoted my research this last week, again, highlighting the fact that there's a lot more property to come on. And interestingly, I've just been looking also at what I call down traders. So these are people with larger houses who, over the next 5 years, will be wanting to get shot of them, right? And move into a smaller place, release some equity for retirement or to pay off the mortgage. And interestingly, the number of down traders looking to sell ahead is going up dramatically, which suggests there's another downward force there. So yeah, we're in this sort of really weird artificial bubble at the moment, but there are some really fundamental forces which will have an impact later in terms of how the markets shake out, unless of course you buy with Bitcoin. And then of course, depending on whether you actually set the price of Bitcoin when you exchange contracts or when you settle, you could be half as expensive or twice as expensive, I suppose.
Yeah, well, that's right. Look, I do. I must take my hat off to all my Kryptonian friends there out in Twitterland. It's a roller coaster ride. I really don't know how they keep their wits about them, because it's been rather interesting looking at it for only a week, and I'm here. But look, as I said, it's been a baptism of fire for me in this first week. But there's hope, and I guess I could say that us Kryptonians live on hope, and others might say we live on a hope and a prayer to make sure that that the crypto prices keep going up. But what a better way to keep the price of crypto and property on a high when you can buy and sell through properties through Bitcoin. But they are the questions that we need to ask. The CGT implications when you are obviously transferring one asset class to another to purchase property. What's the CGT implications there? Particularly if you bought Bitcoin like some of my friends did when it was around $35 per Bitcoin. What would the CGT implications be for them, and if they were to buy in these properties? And then the other question, Martin, is when you're buying, are the prices inflated to cater for any potential loss, which is what developers used to do with apartments when the market did its ass a few times around in the 90s and also in the early 2000s. So prices were raised as a rebate. And is the same thing going to happen? Is the same phenomenon going to occur with this? So therefore, if you feel that your property is worth $1 million, are you going to put it up for 1.3? Because you want to cover yourself in of any shortfalls on the crypto price. And as you said, is the Bitcoin price on exchange? Is that marked on exchange or on settlement? And how do you make up the difference? What are the valuers going to do if there is a portion of it that's going to be bought with Bitcoin and a portion of it that's going to be financed? How are the valuers going to look at these contracts, and how are the banks going to look at the contracts as to be secure?
Yep, a bunch of questions there, which I can't answer. But one of the ones I want to underscore is this: there is a capital gains tax implication, of course, when you're trading, particularly if you're looking at making capital gains over a period of time, right? So if you bought a long time ago and then you decide to sell now, you owe the tax man. A lot of people have forgotten about that.
No, and the other bite that the taxman takes, or stamp duty. The government takes is the stamp duty. That's not. I'm sure they're not going to accept Bitcoin. They're going to want it in cash. So the higher you raise the value of the property in order to let's say to sell to somebody that's given you the crypto, you're also the person coming in to purchase. They've got to fork up 5% or thereabouts in cash in that other currency, in that other paper worthless fiat currency, so they can pay it off to the government. It's 4.75% on average, but it's rounded off to 5%, and 5% of 1.3 million, is a lot of money. It's not small change. It's $65,000.
Yeah, absolutely. Well, there's a lot to be aware of when you actually are starting to venture into things. Another reason to be aware, of course, is future interest rate rises. And, CBA has upped some of its fixed rate loans. Other people have too. So it's some interesting questions we should need to think about now. Well, when are rates going to go up? How much are they going to go up? Who's going to be affected by those movements? And what does it mean for the market overall?
Well, Martin, that is an interesting debate that I've had with many people, and we can thrash it out a little bit now. And that is, what markets are going to be affected. I think we've got to. My personal take on this is we've got to start segregating different markets. My personal opinion on houses, as I've said, and I've been saying for a couple of years, is a matter separate a very clear separation between houses, or what people would consider a home, as opposed to an apartment, and in particular high rise, because I think the interest rate rise will have a much greater effect on people that bought apartments, because the values are just going to be dropping, and they will continue to drop once all these apartments that are going to come on market do come on market. So that's going to be very much unsustainable. But whereas with houses, Martin, I get the feeling that they're going to hold up to a certain point. Now, is it a rise of 50 basis points? Is it a rise of 100, 150, 200 basis points? We don't know. We don't have the crystal ball. But in that camp, I would say that first home buyers are the first ones that are going to be smacked in the teeth with any interest rate rise in the home space, in the house and land space. And the reason why I say that is because predominantly they're the ones that got conned by the government to come in with all these schemes of borrowing money from the government, pulling money out from super to add to the deposits, to jump in on a hot market that was, quite frankly, was somewhat unsustainable if they were to go in normal. When I say normal, by saving your deposit and then jumping in, knowing that it is sustainable, because you've got these added loans. You've got added loans, and there will be added pressure by any interest rate rise. So I think in that space, or in that camp, the first home buyers are going to be really, really smacked in the teeth. They're the ones that are going to be first cab off the rank to get that whacking.
I think that's right. And interestingly, of course, a number of first-time buyers got some very cheap discounted loans for a period, right? But those are only for a short period, then they go up in any case. So they've already got higher rates ahead. You've also got those people who are looking to refinance towards interest only compared with principal interest, and those rates are going up. And some of the fixed rates are also rising. Now, that may not be an impact on day one, because if you've locked yourself in for a couple of years or 3 years, you don't have to do anything today. But the critical question comes at when you next refinance, what extra will you have to pay, right? That's the critical question, because we're not seeing yet significant movements in the variable rate loans. And, there's still a lot of loans that are on variable, but it's those fixed rate loans, particularly if you locked in at a really cheap rate over the last year or so. There is a cliff ahead when that loan matures and you don't have to go get another one. You'll be paying more. Now, if you're smart, what you should be doing is putting some money aside for now so that later you can actually use that to help with that transition to the higher rate. But I can tell you that according to my surveys, not many people are doing that. People are actually just saying, whoopee, we'll spend the rest and then face it when it comes. But I think this rise in rates could be quicker than people expect, and it could be a little bit more strongly hitting some people than others, but it could well be in the next few months we see some of those impacts coming through. And again, I agree with you, apartments will probably be where it hits first-time buyers also, but I think some of the investors are going to go for a shock as well.
Look, investors and let's say even some people that have already held for properties for a couple of years, and I say this because what I'm also noticing out there, Martin, is that people are going crazy with the capital gains that they've got in the property, and particularly when they see the neighbours sell for a house that would have otherwise sold for. In a cooler market for $1 million, they go out and sell for 1.2 or 1.25. So that Mary and John go out and refinance theirs. Why? Because they want to start upgrading their vehicles again, and they want to start looking at all these other, toys once more. And so when the population or these property owners start looking at owning those fancy toys again because they've now got a lot more equity in the property, that's when they get themselves into strife. It's not necessarily the original mortgage or the original loan that gets them into strife. It's all the added as I call them, pull downs on that mortgage that really bring them unstuck. And you see it in the fancy toys or the fancy cars, the extra cars, and now Johnny and Mary, they don't have to catch a bus to school anymore. They also want a car, and this is what we talked about a few years ago as well, with what you see with when the property prices go up and people start seeing a bit of equity in the property. So that's one thing. And look, I guess one would say thank God that the borders aren't open, because another reason why people pull down equity from their properties is to travel overseas, and I know some people that would spend upwards of $30,000-$40,000 a year on traveling overseas. And where does that money come from? It generally comes from the principal place of residence, pulling down on their mortgage, pulling down on their equity. Obviously, the other thing is that a lot of real estate officers are doing once again, and that is because they're not making a hell of a lot of money as people would think. They're also pulling down on equity, refinancing the principal places of residence to keep the business going. So it's a vicious circle. But that's what brings people unstuck when rates start rising, because the banks are merciless when it comes to that. Not so much the principal place of residence. They won't dare to walk in quickly on on that, but they will walk in on those added toys or commercial loans that they would have got on top of using the properties as securities. And I've seen this twice around, and I don't see that it would be any different if rates start going up again.
No, I think that's probably right. And interestingly, of course, quite often what happens with those who are mortgage stressed, for example, I see that in my surveys quite often, that what happens is the first thing they do to try and get out of mortgage stress is to refinance and pull down some more equity from the property they've already got and the loan that they've started to repay. So what that does is to actually give them a bigger debt problem, and they might do that once or twice. But refinancing when you're in mortgage stress doesn't solve anything unless you fundamentally change your behaviour. If you continue to spend precisely as you were doing previously, what you're doing is just making it a lot worse, right? And the other thing that happens is if you start increasing the loan-to-value ratio, then the rate that you get for the next time you get a mortgage will go up because the risks are higher. So there is this slippery slope that people don't understand, and this sort of magic money machine thing about property is a little bit of a mirage, particularly if you've got financial flow issues that you're wrestling with. And I see this all the time in my surveys. The other point to make is that we've got the interesting situation where Josh Frydenberg is still wanting to push through the responsible lending obligations. Going back to Choice, that was one of the reasons why Choice and I worked together on the mortgage stress data. So Frydenberg is still wanting to bring back those laws back into Parliament in June to try and make it even easier for banks to lend, despite the fact that I don't think there's any evidence that banks are having any problems with lending at the moment. In fact, I would say they're being too generous, and there are lots of loans being written that shouldn't be written at the multiples they currently are. And yet we've got this ideological situation where the government is still pushing, the removal of responsible lending obligations, or as I say, they're going to make the banks even more irresponsible in their lending than they currently are. I mean, this is a political minefield. So Choice, more than, I think it's 150 other organisations around the country have been pushing to make sure this doesn't happen. We know that Pauline Hanson is against it now. We know that some of the other backbenchers in the Senate are also against it now. So it'll be interesting to see whether this does get pushed through or whether actually there's enough resistance to stop it. But, this is nuts when we've got lending growing very significantly, when mortgage stress is so high, and with the prospect of higher interest rates, people just need to be a little bit more cautious. I always say, Edwin, when you're thinking about how much you can borrow, don't go by what the bank says they'll lend you. Go by what you genuinely, honestly believe you can manage and service, even if things go a little bit awry. So put in some buffers in terms of interest rates and expenditure. And whilst you might end up with a smaller pool of funds, you've got a much greater probability of being able to survive when things go a little bit wobbly, as they quite often do.
Well, that's right. And this is why, again, I'm saying that it's not necessarily the actual mortgage on the property that brings people unstuck. It's once they get in there and they see that little bit of extra equity in there. The people that have realised that equity over, let's say, extra equity over the last 6 months or 12 months in the principal places of residence, or even in their investment properties, other than apartments, they go out and start playing around with that and doing all sorts of silly things with it. And that's what brings them unstuck. And the other thing is, Martin, is we forget, a lot of people forget that the majority of properties, I don't know how to who would have this data, but the majority of properties, they're already 40 years old, and we've got people buying in the inner west of Sydney, homes that are over 100 years old and paying crazy dollars for 2-bedroom and 3-bedroom dwellings in Redfern now for these terraces that have got 2 party walls on either side, and these were built. Yes, they've been renovated. They look all nice and dandy. But at the end of the day, they still need a lot of rectification work potentially in the future. And if shit happens with, not necessarily with the one that you bought because it looks nice and pretty and renovated, but with the one next door that you're attached to or on either side, all hell breaks loose, and you could be up for hundreds of thousands of dollars. People don't realise how much it costs, notwithstanding the fact that that timber has just gone up 40%, and steel's going to go up another 30%. And again, there's going to be another price hike in June, at the end of June, because of what we discussed in our podcast, and that was these supply chain breakdowns and all that's going on with our government and the Chinese government and everything else in between. So we broke it then, and now people are affected. There are builders that can't finish on construction. They just need minor detail work to be finished, but they can't finish on properties at the moment because they've been waiting on materials, exclusive materials for 2-3 weeks, and they're still waiting, and they can't hand over the properties to the owners. They can't do the handovers and so forth, let alone the people that can't even start. I've heard reports of developers or builders in Melbourne and in Brisbane that are simply just starting the work on these homes that first home buyers have bought on the guise of the government helping them out. And guess what, Martin? Some of these projects, although they've got involved in these purchases. I'm being told that some of these homes won't get handed over for another 6 to 12 months because the builders can't get any materials. They can't get enough materials to keep up. So, where is it all gonna end? And but going back to what you said about the government in Freiburg and what they're doing and what they're mandating and watering down the responsible lending laws and regulations. Well, it's the sole purpose is so that people can see and can realise equity in the properties, so they can go out and spend and allegedly or supposedly keep the economy going. But you know what? Things are just they all look great on paper, Martin, but out there, there's a lot of pain. There's a lot of people that are looking to rent that are in a lot of pain. Prices of everyday living is going through the roof, and this is the dialogue that the government isn't having. They just want this quick fix, because as Adam said in that video where I alluded to earlier on, says that they're not interested in losing elections, so therefore they're not putting forth good policy and good regulations and laws in order to protect the people. They're just interested in their ass to make sure that they're in power over the next 4 years.
Well, there is definitely buying votes and what have you there, but it's interesting, Edwin, because I receive quite a lot of information from some of our viewers, as you do as well, and I've had one particular viewer send me some quite disturbing photographs of commercial premises in relatively, well-known areas of one of our big cities. I might actually put a few of them up because it's highlighting to me, and I've seen it elsewhere as well. I was in Wollongong myself today and walking down one of the main drags there. The number of vacant shops and the number of derelict shops now is just incredible. So, if this is an economy that's doing really, really well, as all the propaganda is suggesting, there seems to be a complete mismatch between reality on the ground and what is being reported, from Canberra and in the mainstream media. And it's pretty scary because I think that we've got this, duopoly between reality and illusion, right? Maybe it's being schizophrenic. Maybe, both is true. But unfortunately, I think that the optimism is in the minds of some politicians. The reality on the ground, which people are seeing week in, week out, month in, month out, is much closer to the truth, which is one of the reasons why I still maintain that the economy is not, buoyant. There are significant issues, and there are lots of people, those with mortgage stress, as we talked about earlier on, those in commercial sectors still struggling, those where rates are going to rise. There are some very important signs there which suggest that things are going to be quite wobbly for quite some time. And I'm afraid that budget was not going to really attack any of the critical issues that should have been attacked. So all shame to them, I'm afraid.
Yeah, look, it is shameful. And again, I'll say, I'm not politically affiliated with anybody. I was very vocal in my younger days as to who I voted for or who I believed, but at the end of the day now it's just become one big blur with politicians. Some independents say good things, others are just in it again for the joyride and the gravy train as much as the ones in the main parties. But understandably, it's up to us to decide what we do, how we do it, and why we do it, and be responsible for ourselves. The banks aren't going to be responsible for us, and nor are the politicians. But it's up to us. And I just implore, if you think you've got equity in your principal place of residence, don't just draw it down to go out and buy a bloody Porsche or a BM or a Mercedes or anything else on four wheels that you think you fancied. If anything, if you're going to do anything with it, look at doing the rectification work on your property ASAP before materials continue to rise in value and before only God knows for how long that's going to be. They're going to be available for, and if you can even get them, for the next 12 to 18 months, do something positive with it, not something flimsical. And look, and I also just want to say, Martin, before I go, is that just to be clear as well, I'm only playing with $3,000 in crypto, so it's nothing to, it's not like I've mortgaged my house like many have done in the past to get into this blockchain and this crypto thing. It's just something that to try and understand, and it's a learning curve and so forth, and it's being a roller coaster ride, but it's trying to understand. For me, it's really not necessarily trying to understand the market as much as it is trying to understand and connect with the people that do get involved with it, because there's some great people out there, and I see some great posts and what people have to say, and it's just a good way to connect. I mean, I was did a lot of networking on with the BNIs and with the Chamber of Commerce's in previous years, and for me it's just another connecting with the rest of the world, just getting to know people out there, and you don't know who you're going to meet, and you meet people of all sorts of persuasions and all sorts of creeds and races, and it's just adding to that pool of wealth and knowledge that people have out there, and again, hopefully what we say adds value to the people that listen to us as well. So it's quid pro quo. I get some out of the net, and hopefully what I say people can benefit from as well.
Yeah, and Edwin, I think you and I have a very similar view, because I have some cryptocurrencies too, not a lot. But again, I've done it because I want to understand and also plug into some of the vibe there. But I always say to people, look, you've got to understand that when you invest in crypto, you might make a big return, you might not. You should be in a position where if you lost it, it wouldn't actually fundamentally destroy your financial position, right? If you've got more into the crypto markets, for example, I've seen people starting to put superannuation in or pulling equity out of their property to go buy crypto, those are really big warning signs for me, because nobody knows. I mean, the crypto markets may come up again, they may not, but the risk profile of investing in the cryptocurrencies relative to other types of investing is still pretty adverse. And people will say to me, well, there's no other market that's gone up so much over the last 2 or 3 years. Well, there's no other market that's dropped 50% in 2 weeks, right? I mean, that's the problem, right? So my view is caution is the watchword here. I'm not saying don't go and experiment with cryptocurrencies, but be prepared to invest what you can afford to lose.
Yeah, and also likewise with property, because it is a bigger ticket item. And again, I'll say, if and these are the things that people do. I mean, I've just helped my son buy a property. And it took me a while many chats with him to decide what was a good what was a good option and what wasn't a good option, and the reasons why. He's in the building game himself, and he gets all sorts of pulls and persuasions from his colleagues and in the companies that he works for. But at the end of the day, it comes back to what's the upside? What are the benefits that you want, short term, medium term, long term, and what are you looking for? What are you looking at doing? And they're the things that I guess that you and I enjoy sharing with people, with family and friends. And again, I'll say that this, and that was just to be clear that I don't want people to think that I went out and sold one of my properties in order to get into crypto. I didn't. But at the same time, it needs to be said, and we're just having some fun with it, and to understand it. Others take it very, very seriously, and I know, as I've said and as I've shared, I've had so far 5 clients in this year alone that have made a lot of money out of crypto and are now looking at getting into the property market. Have got into the property market. Have realised their gains, have got into the property market, and they've made their choices. Good luck to them. Good on them. It's like that in all aspects of investing and attaining wealth, or whether it be gold, silver, precious metals and stones or whatever. Each to their own. But as you say, Martin, look for the warning signs. Research and continue to research until you feel comfortable and feel confident, and that you may lose more than what you put in, and the same goes with property if people are speculating in the different markets. So, but look, it's been great, it's been fun, and I think what's come out of tonight's chat, Martin, for me, is the fact that people, individuals, have to make up their own minds, and don't wait for the government to make up things for them, because it's just not going to happen, because their interest is in obtaining your wealth, your money, your hard-earned labour and earnings, and to feather their nests and further their journey in their political careers. But so let's be vigilant, and let's keep on having fun.
Absolutely. And I want to leave you with something I saw on the side of a builder's van today. It was the name of the firm. It was called Fix Up and Flip. And I thought that was an amazing name for a building firm.
Wow. Okay.
I thought, well, at least you know what you're getting on the tin.
That's right. Well, look, like I said, mate, there are some good deals out there. There are some, but you have to, they don't come every day, and it's research, and some of the criteria and some of the wish list that some of our clients give us for for properties, one would say it is wishful thinking. So maybe this guy works with a lot of people that are in that category of wishful thinking.
Well, I do think that people are actually quite attracted by the idea of, well, we'll just, we'll fix it up and then we'll flip it, right? Unfortunately, I think that things are somewhat more complicated than that. Edwin, it's been great talking with you once again. Good luck with your buying the dip. I hope the dip doesn't go into zero, but, keep throwing a bit more money in and see what happens. The idea of averaging down, you go low and you buy a bit more, you go low and you buy a bit more. That means that the average price is actually improving. But obviously, it really only works when the price starts going the other direction again. So we'll watch this.
Well, that's right. And I mean, I'm trying to convince Dusty and Evan to lend me some of their money, so as I can throw it in and do that, average it down, because I'm hemorrhaging. I think, I just checked before we started the podcast, I think I'm 47% down on my money. But they just won't give me the piggy bank, Martin. They just will not hand over the piggy bank.
Well, just remember that cats have 9 lives, so they should be able to afford to do it.
Yeah, they're smarter than that.
Edwin, great to talk to you once again, and I guess we'll do it all again next week. And keep on watching those signs.
Yeah, that's what we got to do. And always a pleasure. And look forward to see what comes of this week, Martin, and see what else we can chat about in the next rant.
Look forward to it. Take care, Edwin.
Cheers, Martin.